special guest with me today who is my wife and also business partner. Her name is Shaneel, and Shaneel has actually worked with me not only as my business partner, but she's our internal CFO. She's also started a few businesses of her own and also started a few businesses with myself. And today we want to be talking about just basics around starting up a business, the setup stage, mostly around that setup stage and the experiences we've gone through with not only our own individual businesses, but also the hundreds of clients that we deal with on a day-to-day basis. This is a podcast that is for those entrepreneurs or people trying to be a business owner, but they just don't really have confidence in what they've done so far, or if they haven't started what they should be doing in the initial stages of their business. Now, we're not going to go into the actual strategic planning of setting up a business. It's more so around the setup, the structure, and anything around that is crucial to making sure that we have the right foundations. So yeah, welcome, Shaneel.
Thank you.
I guess I just want to have a quick chat and just discuss maybe firstly, some of the businesses that we've started up. We have this one here, which is New Way of Accounting, but over and above that, we also have the financial planning side.
Yeah, we've got insurance as well, and we also have finance and mortgage broking.
Yeah, and over and above that, we also have set up a few e-commerce store. Shaneel had her own matcha tea business.
Yeah.
And we also set up a watch business where we were importing watches and designing watches here in Australia, importing from China, and which we sold off probably
a couple of years ago now.
Probably about 6 years ago now, I'd say.
Yeah.
Yeah, so in terms of setting up businesses and making sure that we're ticking all of the boxes, I'd say that we've had a bit of experience in that. And not only that, going through multiple business setups with hundreds of clients, I guess kept us well versed in this area.
Yeah.
So I guess in terms of choosing the right structure, this is the first topic that I want to discuss, because a lot of clients that we meet with, there's always that issue of basically running in blind and just starting their business and automatically just getting an ABN from the ATO and not looking into the ins and outs of what structure that they should be in. What do you think about how people should be structuring their business, and what are your experiences in that?
So people don't necessarily always have a good idea around the things that they should be considering when they're looking at setting up a structure initially, because there's lots of areas that you have to look into, and that it comes down to your personal circumstances. It could be even making sure that you're set up in the right structure to make sure that you're doing everything you can to minimize your tax.
Alongside that, setting up your personal circumstances with and aligning your goals. This is one that a lot of people forget about. Straight away, they think about just the business side, and they think about the legalities and asset protection. But using us as an example, we want to make sure that from the start we're trying to identify what we wanted to do. Let's say New Way of Accounting the business. This isn't we're not looking at this as a short-term business. We're not looking at this as something that will immediately or even a long-term sell down the track. We're looking for longevity, legacy, and making sure that we're continuously growing the business. So that was a crucial factor in determining what structure was right for the business itself. Are you able to, I guess, dive a little deeper on our circumstances with our other businesses where we do have business partners?
If you have other business partners, obviously you have to consider both parties in the setup initially, and what your long-term goals are for where you want the business to go. There's also things that you have to consider if you have business partners around making sure that you're putting in proper shareholder agreements if you're setting up a company as well, so that it's all outlined from the get-go what everyone's duties are, basically. If anything does prop up, you've got everything in the one agreement and you can refer back to it. It just allows you to do that.
Yeah, perfect. But I just want to look at considerations such as asset protection. Why do we want to look at asset protection in that first instance? And we can bring it back to our situation, for example. So I'll get Shaneel to explain how we do our structures. And just because we do it this way, it doesn't mean that others should do it the same way. What you need to do is seek advice on it first.
Currently at the moment, for our situation, basically all of the business the businesses are in Reuben's name, but all of the assets are actually held in my name. And that's a decision that Reuben and I made when we were planning out all of our structuring and everything. Should anything happen down the track to the business, or anyone, try something, or a bad situation happen, and we are put in a position where someone wants to take something out against the business, it means all of our assets are basically protected because everything's still sitting under my name rather than under Reuben's.
Yeah, and that's something that we did. And you have to, again, discuss this. Don't just jump into these sort of situations where you'll just implement something because someone else is doing it. We've done this for a particular reason. And like Shaneel mentioned, all of the trading entities, all of the entities that have risk are under my name. So I'm essentially the risk taker. I'll stand in front of the train and it'll hit me before it hits Shaneel, or it takes away any of our assets in the background. So that's how we've set it up. The next point I wanted to talk about is tax minimization. Super, super crucial to make sure that this is taken into consideration before you start trading and before you start implementing structures, because time and time again, we're coming across businesses who are making maybe 30K in profit to $1 million or $2 million in revenue, making 600K in profit or 500K in profit as a sole trader. I guess our recommendation there is to make sure that you have flexibility in that tax space.
Yeah, and just making sure you are chatting to your accountants, making sure you're meeting with them regularly, making sure you are getting a good picture of where you're wanting your business to head and what your plans are for the future, because you don't want to get into a position where, like Reuben said, you are a sole trader and down the track something comes along. You don't want to be stuck with having all of that going through into your personal name when there could be other potential options where you could minimize that tax rather than having it all sitting under you personally.
So specific industries, specific areas require specific structures. So for example, on the e-commerce side, a lot of people who aren't well versed in this space will probably not know that the ideal structure for an Amazon US type of business is a company. Now, why is that? Because the US don't respond well to trust, and it also gives other further sort of opportunities there as well. So make sure that you're looking at your industry. Construction industry, for example, here in Queensland, we're making sure that a lot of the entities are set up in a company because of QBCC registration issues. So it is a case-by-case basis, and don't worry if your friends are doing something different. That's the biggest mistake that we see, is that my friend or Joe down the street started up a trust, so I should do it too. Or why did I start a company? You don't need to listen to those sort of aspects. Listen to your advisor. They are the ones that will be able to guide you in the right way. Just don't rush into it. I think that's the last thing I wanted to chat about there. You don't need to rush into it. This small investment that you need to do at the start can save you thousands, not only in tax minimization, but also protecting your own assets. Make sure you're investing into the foundations of your business to be able to grow at scale.
Yeah, don't always just take the cheapest option from the beginning. Setting yourself up as a sole trader is obviously the lowest cost option, but like Reuben said, if you set up properly from the beginning, it's going to save you lots of money and time potentially later on down the track when your business is growing.
But if you are worried or concerned that you're not in the right structure and that you've rushed into it, or you want a second opinion, just let us know. We offer a free 30-minute meeting here, so you can click on the notes below, and we'll have a link to that. You can call our office, and one of our managers here, accounting professionals, will assist you with figuring out what you need to do next.
People tend to think they may have to get GST registered straight away, but that's actually not the case. It's not until you're turning over more than $75,000 for most people that you have to become GST registered.
Again, it comes back to seeking that advice, because we have had some clients, again, in the e-commerce space, they haven't registered for GST, waited until $75,000. However, all of their product and all of their revenue was GST free, meaning that they should have registered from the get-go, and they could have saved a lot in tax, basically. So it's again, case-by-case basis. Just make sure you get your advisor to do it.
Yeah, it's the easiest way to make sure that it's all covered, because we always have clients coming to us and they're not really sure if they have an ABN set up properly for the company, or they may have lost their TFN or something like that. If you get your accountant to do it from the get-go, we'll have everything on file basically, and it just makes it heaps easier. If you're just beginning, my recommendation would be to always just make sure you're setting up those 2 separate accounts, one a working account and 2 a savings account. And with the savings account, you should be using that to put away money for things like your tax, your super, your PAYG withholding. So what I would recommend when you do start, employing staff and all of those things is every time you're doing a pay run, you automatically straight away transfer the PAYG withholding and the super away each pay run so that you know that it's sitting in that savings account. And when you get to the end of the quarter, you've got it there to be able to make payment for it. Lots of businesses get stuck. They think they have a lot of money just sitting in that trading account. They will go and spend it, not knowing that a whole lump sum of that is going to need to go to things like your super, your PAYG withholding and your BASs as well.
Okay, let's move on to record keeping. I think this is a very important one because it's just something that it's not everyone's forte. And then I wanted to discuss a few aspects in here about who should be doing the record keeping in the first place, what type of people are suited to that, and when it's beneficial, I guess, to start hiring an external bookkeeper. But let's start off with invoices and receipts. What do we need to keep?
You need to keep everything, and you need to keep it for a minimum of 7 years. I think it is at the moment. And that doesn't mean you necessarily have to be keeping paper copies of everything. I would hope that not everyone has paper copies sitting around for 7 years because that's a lot. We recommend to majority of all of our clients Xero as the number one software to use. Xero actually allows you to connect your bank accounts to the software, and you get bank feeds and everything, so it makes your general bookkeeping a lot easier. In terms of receipts, DEXT and Hubdoc, they both integrate with Xero and will allow your bookkeeping just to become a lot easier once you've got it all up and running and connected and everything.
You definitely can't manage a business without being able to see these figures, and it's one of the biggest downfalls of businesses that we see that are struggling because they just don't have a grasp of these figures.
Making sure that you've got the right person looking after your bookkeeping. To give you an example, me and Reuben were completely different types of people. He is very big picture, big ideas sort of orientated. I'm the type of person that's a lot more structured. I like things put in place. I like there to be systems and things like that. So if it's not your forte, make sure you're finding someone that is an expert in that sort of area to take care of it, because it is really important and it'll just make your life so much easier. There's no point in you sitting there spending hours and hours doing something that, one, you don't enjoy doing, and two, is taking you double the time it would if you were to start paying someone else to do it.
It's the opportunity cost as well. Where is your time best spent? Is it sitting there for 2 hours punching in numbers into Xero? Or is it dealing with clients or creating your product and getting out there and making, $200-$300 an hour doing what you do best? How do we recommend clients to figure out how much tax to put away, let's say each month?
My recommendation is your first port of call would be to touch base with your accountant. They are able to run reports, obviously, and even run through and explain, give you a better understanding of what you're sort of looking at when you are looking at your profit and loss. But they will be able to give you a good gauge of how much you should be putting away, whether it be you're meeting with them monthly or quarterly. And down the track, you'll start learning, if you're meeting with them regularly, what you should be looking for and how much you should be putting away, basically.
Yeah, and I guess the importance of that is you don't want too little in those tax accounts, otherwise you won't be able to pay your tax off. And you don't want too much in those tax accounts, because if you do have too much of a surplus in there, whilst it's good that you're saving it, it's money that's dead. You could be using that money for marketing, additional payroll, additional stock. So it's important to try to get as accurate as possible, and that's where an advisor can help you.
Making sure that you've got insurances in place. Public liability is probably the biggest one, but there's a whole minefield of different insurances basically that you can have. Getting an insurance broker will help you with that, even from things like if you've got multiple vehicles within your business, setting up and making sure that you've got motor vehicle insurance or fleet insurance for all of those vehicles.
All of these things that we're mentioning, insurance, you're choosing the right structure, These are all aspects where I feel as though they're an investment to your business because you're building a very strong foundation. And a lot of people would bypass these aspects, but so many times I've seen it time and time again, that they're just falling into a trap and spending more down the track, losing more down the track. So insurance is one of those ones where it's a necessary evil in a sense. But if you do it right and you're protected, one, you'll have peace of mind. And two, you'll be able to really have confidence in that your business can grow and scale.
Just a little bit further detail on shareholder agreements. The things that they can include in there are things like how much, you should be getting paid as a wage, basically, a definition on what each shareholder's role is in the business, which is a really big thing. Things like if one shareholder wanted to sell out of the business down the track, what the process should be, as in whether they have to first offer it up to the other shareholder or if they can just put it out to market basically without approval from them. So they're really important things that can have a major effect on your business if you don't have in place.
It's very important that everyone goes through this to understand what everyone's, intentions are in the business in the first place. But you might have one person that wants to exit the business in 2 years and the other person wants to hold it for life.
Yeah.
And there are big issues with this because if you don't plan for it at the start, then there's going to be a time where you're going to be butting heads.
Yeah.
And then the lawyers come out and
so at a minimum, if you're running a business, typically everyone will have a tax return that they have to lodge, and that will likely be, if you have an entity set up, you'll be having to lodge a tax return for your entity, plus you'll likely be having to lodge a tax return for yourself individually as well. If your business is, as we mentioned, turning over that 75,000 or you are GST registered, you then have to think about making sure that you're lodging BASs, and that could be on a quarterly basis or a monthly basis depending on your size. Within those BASs as well, if you then have employees, you should be including the wages within those BASs each quarter or month as well on top of that. So they would be probably at the very minimum, your BASs and your tax returns, and there's a few extra things when we come towards the end of the year as well.
A great accountant is always worth its weight in gold. Generally, any sort of accounting advice, whether it be your tax returns, your BASs and so forth, if you have a great accountant that is doing that, or a bookkeeper even, the cost is far outweighed by the actual outcome of that tax return or BAS. So you may be paying less in tax, you may be paying less in your actual BASs each quarter because they're identifying opportunities and ways that we can get tax back or just being able to claim more. But that's the difference between, lodging it yourself and lodging it through a trusted advisor. You may pay $300-400 for a BAS and you think, well, I can do that myself in a few hours, but you may lose $5,000 or a few grand in deductions lost. So you just think about that one as well. So there's always an opportunity cost with anything in life and anything in business.
In terms of the compliance as well, one thing that I would want to touch on is your superannuation liabilities, just because it's something that the ATO is really cracking down on. You need to ensure that you are making sure to pay your super on time, and that means in most cases it's due on the 25th at the end of each quarter. If you don't have it paid on time, you're actually meant to be preparing something that they call super guarantee charge statements, where you have to pay interest on top of the super that's actually payable to the employee. So it can end up costing you a lot more, because one, you'll have to get your accountants to prepare your super guarantee charge statement, which takes some time, and two, you're going to have to pay interest on top of what you would have originally had to pay for your super for your employees.
Yeah, that's exactly right. Well, you have to remember, guys, that businesses, they can be one of the biggest investments that you do within your lifetime, especially if you want to keep growing the business itself. But for me, and from experience and from looking at other businesses, they are probably, if not the best, in terms of return. So it's worth putting that money in, because if you think about it, if you were to put, let's say if you had $100,000 and you were to put that in the bank, you're getting less than 2%. If you're putting that into managed funds, you'd be lucky to get anywhere between 7 to 12%. If you're putting that into a property, if you're hopeful that it'll grow over time, but you're getting a 10% growth, in great conditions. We've seen businesses that return, they can be well above 20, 30, 40%. Don't run your business as if it's just a short-term play. Run it as if you want it to be an empire, even though you may not with the intention of thinking, oh, maybe I'll sell this one day. And if you sell it one day, you have to remember that people are looking at great businesses with great profit, with great procedures and great foundations. If you think about it as it's just going to be a cash cow for me, and every time I get $1 in, I'm going to rip $1 out and don't care about tax, super, whatever it may be, then you're going to have issues down the track. So spend the time to understand it. But thanks so much for joining me today, Shaneel. And we'll probably get you back here one day, talk about other sort of issues within the business area. But that's all for now, guys, and we'll see you next time.